Michael Parness, you are a trend trader, actually wrote the book on it. So let's talk about some trends you don't like. And we'll start off with Apple. They come out with earnings later today. That stock's pretty cheap. Trades at, I think, 9 times next year's earnings. So why don't you like it?
Well, Apple's already in a bear market. It's down from the 130s to right under 100. Comes out with earnings today. But I think it's really how you look at Apple. Do you look at it as a software company with an ecosystem, or do you look at it as a hardware company? We look at it as a hardware company. I think if you base it on it being a hardware company, it's not that cheap. You know, if you look back over history of the Hewlett Packards, the Compaqs of the world, where are they now? Hardware companies, they don't hold these kind of valuations, and I think that ultimately Apple will retest the 2011 lows, which is about $44 a share.
All right, so let's talk about a software company. Then you also don't like Oracle. This stock's had a rough time in the past year. It's down over, I think, 20% in the last 12 months. So why do you think Oracle's going to go lower? They're doing a lot in the cloud, which is pretty hot.
Yeah, but they have a lot of competition in the cloud, and I mean, we're very bearish on the market overall. Our targets are 1,500 on the S&P on the high side and 1,250 on the low side. So if you look at the market that way, then a stock like Oracle, which really has gotten most of their growth from inorganically by rolling up other companies. And so I think that, again, you're looking at a stock that technically is broken, it's in a bear market, and with the market the way it is, I think you have to be short the stock.
All right, another name that you don't like is Deutsche Bank, and apparently nobody likes Deutsche Bank. Stock's down 40% in the past 3 months. Just announced a record loss. So how much lower can this one go?
I think it could go to easily single digits. The company just announced that they're cutting bonuses. Not a good sign. They had just announced a $7.5 billion write-down. I think that if they have the largest derivative book in the world as far as banks go, $75 or so billion, and I think they're going to have to write down a lot of that money because they're in emerging markets, they're in commodities, and they're in China.
All right, and then finally, just to show that you're not a perma bear, you are long Facebook. You see an upward trend there. What's driving that?
Well, I think if you're going to be long this market, you have to be in a high growth stock with upside. And I think while we're very bearish on the overall market, I think Facebook at the very least will outperform based on the fact that we look at it as a stock that, or a company that has a platform. They're going to add video. They're going to go after Netflix. They're going to go after Amazon, and I think they're going to do well because they've done well in everything else they've gone after.
All right, thanks a lot, Michael.
Thank you.
And thank you for watching The Street.